Florida or Texas? It is the question that defines retirement for millions of Americans today. Both states have built a massive reputation as the ultimate tax havens. No state income tax, warm weather, and a culture that celebrates freedom and independence. But as we move further into 2026, the landscape has shifted dramatically. The cheap retirement everyone dreamed of 5 years ago is becoming harder to find, and if you aren't careful, you might walk straight into a financial trap that could cost you tens of thousands of dollars over the next decade. Today, we are going to strip away the marketing fluff and look at the hard, cold numbers of the Texas versus Florida showdown. We have to start with the biggest myth in retirement planning: the idea that no income tax means low taxes. In reality, every state has to pay its bills. If they don't get the money from your paycheck, they will get it from somewhere else. In Texas, that somewhere else is your home. Texas has some of the highest property taxes in the United States, often ranking in the top 10 nationwide. We are talking about an average effective rate between 1.6% and 1.8%, but in some fast-growing suburbs around Austin or Dallas, that number can climb even higher. Imagine buying a modest $400,000 home for your golden years. In Texas, you could easily be looking at an annual tax bill of $7,000 to $8,000. Even with the over 65 homestead exemption that freezes the school district portion of your taxes, the base remains high. For a retiree living primarily on Social Security, a monthly tax bill of $600 just to keep your house is a massive recurring expense that never goes away. However, we must also consider the hidden service gap in Texas. Because there is no state income tax, many local municipalities in Texas rely on aggressive user fees. In 2026, we are seeing a rise in utility costs and local service fees for everything from trash collection to water management. In 2026, the drier West Texas regions. While your tax bill is high, your monthly utility bill in a Texas summer, where the AC runs 24/7, can easily touch $400 or $500. When you add property taxes to these soaring utility costs, the fixed part of your budget becomes much more volatile than most people realize. You aren't just paying for the land, you are paying for the infrastructure to survive the heat. Now let's look at Florida. On the surface, Florida seems to win the tax battle handily. Their property tax rates are significantly lower, usually hovering around 0.8% to 0.9%. On that same $400,000 home, your Florida tax bill might only be $3,500. It sounds like a landslide victory for the Sunshine State, doesn't it? But this is where the 2026 Florida trap comes into play. While Texas hits you with a tax bill, Florida hits you with an insurance premium that is spiraling out of control. Because of the increased frequency of storms and the volatility of the global reinsurance market, Florida homeowners insurance has become the highest in the country, with many retirees paying over $7,000 a year just for basic coverage. In 2026, we are seeing a strange phenomenon where Florida retirees are paying more for insurance than they are for property taxes. When you combine taxes and insurance, the carrying cost of a home in Florida is often higher than in Texas. If this breakdown of the Florida trap is opening your eyes, do me a quick favor. We are on a mission to help 1,000 retirees find their perfect affordable home in this crazy 2026 market. If you want to be part of this community and get these deep dives every week, hit that subscribe button right now. We are growing fast, over 150 members already, and your support helps us reach more people who need to hear this before they move. It's free for you, but it helps our mission grow. Now let's get back to the hidden costs you need to know. Furthermore, Florida's 2026 landscape includes the special assessment risk. If you are looking at a condo or a home within a homeowners association, HOA, Florida law has become much stricter regarding structural reserves after recent building safety reforms. Many retirees are being hit with surprise assessments of $20,000 or even $50,000 to repair aging infrastructure or seawalls. In Texas, you rarely see these types of sudden, massive lump sum hits to your retirement savings, as the state has more land and less reliance on high-density coastal condos. This financial predictability in Texas is a major factor that often gets overlooked in the excitement of moving to the beach, But retirement isn't just about the roof over your head. It is about the life you live under it. This is where Texas starts to pull ahead in the daily budget battle. The cost of living index in Texas consistently sits around 95, meaning it is about 5% cheaper than the national average. When you go to a grocery store in a town like New Braunfels or McAllen, your dollar simply buys more eggs, milk, and meat than it does in a Florida hub like Sarasota or Fort Myers. Florida's cost of living has crept up to an index of 103, largely driven by the sheer influx of people moving to the coast, which has inflated the price of everything from a gallon of gas to a routine dental checkup. Healthcare is another critical pillar for any retiree, and the infrastructure in these two states tells two different stories. Florida has a massive, well-established healthcare network specifically tailored to seniors. You are never more than a few miles from a specialist or a world-class hospital. However, that convenience comes with a premium price tag. In 2026, Florida's healthcare costs have outpaced the national inflation rate due to high demand and labor shortages in the nursing sector. Texas, on the other hand, has some of the finest medical centers in the world, especially in Houston and San Antonio, but the system can be more spread out. If you choose a hidden gem town in rural Texas to save money, you might find yourself driving an hour or more for specialized care. In 2026, time is money, and for many retirees, the proximity of Florida's healthcare system is worth the extra cost of living. We also have to discuss the boots-on-the-ground reality of transportation. Texas is a driving state. Everything is bigger, but everything is also further away. In 2026, with gas prices and vehicle maintenance costs remaining high, the Texas tax also includes your car. Retirees in Texas often drive double the miles of those in compact Florida retirement communities. In Florida, you can often survive with a golf cart or a single vehicle for a household. In Texas, you almost certainly need a reliable car for each person if you want to maintain an active social life. This adds a hidden $3,000 to $5,000 to your annual Texas budget that Florida retirees often avoid. Let's dive deeper into the climate factor. In 2026, climate resilience is no longer a political debate, it is a budget line item. Florida's geography makes it vulnerable to rising sea levels and hurricanes, which directly correlates to those insurance hikes we discussed. But Texas has its own challenges. The Texas power grid has faced significant scrutiny over the last few years, and many retirees are now investing in home generators or solar backups to ensure their safety during extreme weather events. This is a one-time cost that can range from $10,000 to $15,000, but it is a necessary investment in Texas that many Florida residents in newer developments don't have to worry about as much. So, let's talk about the lifestyle and the vibe of these two giants. Texas offers vastness. It is a state built on the idea of having your own space. If you want a few acres where you can enjoy the sunset without seeing your neighbor's chimney, Texas is your place. The social scene is centered around community, barbecue, and local high school sports or university events. It is grounded and traditional. Florida, conversely, is the world's playground. It is built for activity, pickleball, boating, golf, and beach days. The social scene is intense and vibrant, but there is a catch. Florida is becoming increasingly crowded. The traffic in places like the Villages or the Tampa Bay area in 2026 has reached levels that many find stressful rather than relaxing. Texas still has pockets of true quiet, provided you stay west of the I-35 corridor. We also have to address the SpaceX effect and industrial growth. As we discussed in our recent videos, Texas is seeing massive industrial investment in places like Brownsville and the corridors around Austin. This is a double-edged sword for retirees. On one hand, it keeps the state economy booming and ensures that local services remain well-funded. On the other hand, it can destroy the small-town feel of a place overnight and send property values and taxes skyrocketing. Florida doesn't have this same industrial surge. Its growth is driven almost entirely by tourism and retirees. This makes Florida's economy more sensitive to national economic downturns. If the stock market dips, Florida feels it immediately because people stop taking vacations and buying second homes. Texas, with its energy, aerospace, and tech sectors, is often more resilient during a recession. Which one should you choose for your Social Security retirement? If your priority is the absolute lowest daily cost of living and you don't mind living inland, Texas wins. You can find a small home in a town like Kerrville or Fredericksburg, manage your property tax exemption, and live a very comfortable life on a fixed income. But if your dream is the water, the sand, and a community where every day feels like a vacation, Florida is still the king, provided you have the insurance buffer in your savings. You cannot move to Florida in 2026 without an extra $10,000 in an emergency fund specifically for rising premiums and potential HOA assessments. The decision ultimately rests on where you want your financial pain to come from. Every state takes their cut. They just use different hands to do it. Texas will take your money through the city hall via property taxes, but it offers a more stable daily cost of living and a massive amount of physical space. Florida will take it through the insurance agent and the HOA board, but it offers a specialized high-activity lifestyle that is hard to replicate anywhere else in the world. Ultimately, the choice between the Lone Star and the Sunshine State isn't just a financial one, it's a lifestyle one. But as we've seen today, the math doesn't lie. My goal with Smart Retirement is to make sure you know exactly who is taking your money before you sign those closing papers. We are on a mission to help 1,000 retirees find their freedom without the 2026 sticker shock. If you haven't yet, join our family by hitting that subscribe button. If you're still undecided, watch our recent video on Pennsylvania's 0% tax benefits right here. It might be the middle ground you're looking for. Or, if you want to see our list of the most affordable towns in Texas, click the video on the left. Thanks for being part of this journey, and I'll see you in the next one.